This is something that even if I take 69 trainings, it doesn't matter. Whether it's 60 trainings or 60,000 trainings, it has to be taken. We have to take 60,000 trainings, 55 trainings, 55 trainings. I have to take it from here. This is not for us. 55,000 trainings. These are all the things we have to say, and they all have it in dollars. What was it until now? After this time, 2:14 in the afternoon. I myself have 4 positions for a return. For a return, I myself have 4 positions. It was supposed to be decided that the Bitcoin position should be returned. The decision here means that among those who have fallen from here, among those who have fallen from here, among those who have fallen from here, and so on repeatedly, in this example that was given, he returned the return. $60,000 in the increase, $8,500. The increase is $8,700 and the increase is $5,500. I am leaving these examples. I am one of these $5,500 ones. This is one of those $5,500 ones. Here's 60,000 and I mark it as the opening price, or the open actually. What was the closing price? Or in fact, what was the close? The closing price was $85,000. That means it was here. This is also the close or the closing price. I connect these together, I make it into a rectangle. Before I continue with my story, Hamir, can you also tell me, based on today's opening and closing prices, was Bitcoin bullish or bearish today? Bullish. Definitely bullish because its closing price was higher than its opening price for the day. So it has a green candlestick. If the opposite were true, it would be a red candlestick. These color schemes aren't set in stone either. I mean, we can change them ourselves, which I'll explain to you. But by default, bullish or positive candlesticks, those that go up, are shown in green, and bearish or negative candlesticks, those that go down, are shown in red. So what do they call this part that I've drawn so far? This is called the body of the candlestick. Each candlestick is made up of 2 parts. Each candlestick consists of 2 parts, a body and 2 shadows or wicks. My dear friends, we should never get caught up in the names. Technical analysis is not about analyzing names. I could come up with countless other names for each one. But the main point is that we accurately identify those entry and exit points, or in other words, the buy and sell points. Professional use of the simplest tools. For me, names are the least important thing. I don't want to get hung up on terminology. Like, for example, calling this one something else, calling this the body or something else. But the commonly used terms are just these 2. The body and the shadow, or wick. This is its body, which is formed by the opening and closing prices. Now today, on the 14th of Bahman 1403, what price did Bitcoin reach at its highest? What was its highest price? 87,000. I illustrate this price spike like this. It spiked up to 87,000. What was its lowest price? 55,000. It also spiked down to 55,000. Now look at these next 2 parts that I've drawn. These next 2 sections are called the shadow or wick. This candlestick that we've drawn here is for 1 day, so we call it a daily or 1-day candlestick, because these prices we had, opening, closing, highest and lowest, are all for 1 day. A daily or 1-day candlestick. If these opening, closing, highest and lowest numbers are for a week, then the candlestick is called a weekly candlestick. If it's for a month, it's a monthly candlestick. Similarly, if it's for an hour, it's an hourly candlestick. If it's for a minute, it's a 1-minute candlestick. Now, it's important for us to know which time frame we should use and when. Do we even need to analyze all the time frames? If my job isn't, for example, in the financial markets, do I need to use the minute or half-minute time frames? Need to use the minute time frame, or for example, the 30-minute time frame, or not? Is it necessary and useful for me in all markets and all time frames or not? I'll explain this to you in the following. What is the difference between time frames? When should I use which time frame? Imagine a forest. I'm looking at this forest from above. The higher up I look, naturally, I can clearly see a much wider area. That is to say, a significantly broader range or scope, much like the illustrative image you can observe right here. I see some vegetation. There's a stream passing through it like this, and I can't see any details. My view is wider, but I don't see the details. The lower my altitude, the closer I get to the ground, the more details I can see. This vegetation becomes clearer to me. Whether this water is clear or not becomes clearer to me. And the closer I get, In this same stream that's flowing, I can even see the pebbles and small stones. Time frames, or those same time intervals, play exactly this role in technical analysis. When I use higher time frames, I gain a broader perspective. I can see the whole picture. The more I want to pinpoint the exact entry or exit point, meaning buying or selling, I switch to a lower time frame, a shorter time interval, a higher time frame, like what? Like monthly, like weekly. And then go even lower, daily, 4 hour, 1 hour, 30 minute, 1 hour, 30 minute, 15 minute, 5 minute, and 1 minute. So in the higher time frame, I have a broader view of the market. I can see the roadmap. Let's go lower. I get more precise numbers. So which time frame should we use? That was a general explanation of time frames. Those were the time intervals. Which time frame should I use? It exactly and certainly depends on how I approach the financial market. What does that mean? It means that if I'm a medium or long-term investor, there's no need for me to analyze the market on the 4 hour or 1 hour time frames, or even the 15-minute time frame. The highest time frame I need is daily, meaning monthly, weekly, and at most daily. But if my job is trading, if trading is my way of making a living, then naturally I have to use lower time frames. Why? Because those higher time frames don't give me many trading opportunities throughout a single day. They provide medium and long-term opportunities. Let's clarify one point right here for ourselves. Throughout the rest of my talk, when I say medium term, what time frame do I mean? When I say long term, what time frame do I mean? When I say short term, what time frame do I mean? Medium term means 6 months to 2 years. Naturally, less than 6 months is short term, and more than 2 years is long term. So we've clarified for ourselves what time frames we mean when we say short term, medium term, and long term. If I'm an active trader, I shouldn't just rely on higher time frames, but there's a very important exception to this. There's something important, and that's if I'm a trader on the hourly or 15-minute time frames, I first need to see the overall roadmap. First, I need to see what's happening on the weekly, monthly, and daily charts. That's why we start from the higher time frames and gradually move down to the lower ones. Now, if someone is a medium-term trader or investor, they don't go below the daily time frame. But it's essential for everyone to look at the higher time frames and always remember that the higher time frames take priority. Let's put it more simply. What does it mean that higher time frames always have priority? So if the daily time frame gives me a sell zone or a price resistance, and at the same time the hourly time frame gives me a buy zone or an entry signal, I give priority to the daily time frame and I don't make a purchase. So higher time frames always take priority. Now I want to select different time frames on the chart. What should I do? I go up here to the top left. As you can see, there are different time frames available, including monthly, weekly, daily, 4 hour, 1 hour, 15 minute, 5 minute, and 1 minute. For example, right now, by default, my Ethereum chart is set to the daily time frame. When I click on this, the daily time frame chart immediately appears. To effectively keep my chart well organized, after carefully selecting any desired time frame, as you can clearly see, I then proceed to double click on these specific prices. No matter how messy my chart is, a double click will fix it. Please keep this crucial point in mind throughout our entire tutorial. We will then right click on these specific prices and make absolutely sure to set the chart to the logarithmic mode. By default, the charts are arithmetic, but we always activate the logarithmic option.